This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So what I'm going to do today is give you what I would consider to be sort of bread and butter understanding of my approach in multiple time frames. And I'm going to show a pattern that is on an intraday basis, but we can apply this to all different time frames. The same patterns will develop on long-term, monthly, weekly setups as well. I'm actually going to use 4 time frames for this example, and so you can get a really good feel of how we can see confluence amongst multiple time frames. All right, let's go ahead and get going with this. Now, if you want to learn more about these techniques, I would suggest starting with my book. It's at rabilstockresearch.com/book. Also, if you do enjoy this content, please hit the like button and also subscribe. Okay, so I have my grid up, but this time I've got a daily chart in the bottom left, a 30-minute in the bottom right, a 5-minute in the upper right, and a 1-minute chart in the upper left. All right, now the main time frame here that I'm focused on is a 30-minute in this example. Now, I guess I should put it to you this way. The trade is based off the 5 and the 1, all right? But I probably would not have done this by itself, this trade here. I would not consider this a setup in and of itself. But when we look it up and we see what was taking place on the 30-minute, it then gives us this as a really interesting pattern, all right? And so I want to explain a few things. Number one, we've got this reversal pattern developing on the daily chart where we have held the 18 for the first time after a big drop. So we can typically expect some continuation, but the MACD is coming up on the 0 line. So I don't want to play this and really hold them overnight or anything like that. I don't know what to expect on the daily chart as it approaches the 0 line after a really sharp decline, heavy momentum to the downside, and we haven't shown enough strength to the upside. Who knows, it might keep going, but I'm not going to play it that way. I'm looking at this as it's telling me, you know, there's enough momentum to the upside to play something, but I want to do it quickly. All right, now if we look at what took place on the 30-minute, had this strong gap up, and then we consolidated back and we formed an opposing trend pattern on this time frame. But not only that, we form a little double bottom in the MACD pattern. Now, the other thing that's crucial here is we got this strong move to the upside confirmed by ADX on the upside. So we got enough strength to the upside to consider this to be a strong enough trend that if we don't get strong selling, the bias is to the upside, then we can play it for continuation to the upside. Now, if you look at what happened, we had strong momentum here, and then when we had the decline, even with this big down bar, ADX never really got above 25 on the sell side. So this is where red was in control, and we never really got enough strength to overtake the strength of the buyers. So the bias is still to the upside. Not only that, one of the things that developed here was a really nice undercut and rally. So we had support, we undercut that with a single bar, and then we rally up and we form this higher low. So while this is forming the higher low here, we're actually creating an opposing trend pattern in this time frame. So I want to zero in on the 5. So we know what's taking place underneath. We've got enough improvement on the daily that we can expect maybe some upside continuation. We've got an undercut and rally with strong momentum conditions on the 30-minute. All right, so then we're looking at this and we're seeing this pullback, and we have overrun. So what I teach when we have overrun, we want to wait for a little bit more confirmation. Now, we had decent amount of selling here, and that's another reason why we want to be a little bit more careful about any, being too quick to be a buyer. And what I said before, because of what happened here and the strength of the move to the downside, I probably by itself wouldn't necessarily consider this, but because I know it's an undercut and rally pattern, I'm using this as sort of like an entry signal into the 30-minute. Now, I can treat this as a 5 and 1 signal because by itself, it's pulling back to the 18. We've got a pinch play, right? We've gotten back above. The 18 is now rising and we're holding it. We've got this improved, and we don't have, it's turned into kind of a neutral situation where green and red are just kind of going back and forth above and below. All right. So what we want to do though, because this is a little iffy in the way that it's developed, is we want to make sure that the 1 minute has a good signal for us. All right. If we don't get a good signal on the 1 minute, then we never do this trade. So we're going to go and take a look at the 1 minute. Now, during that pullback phase, we get overrun on this time frame. All right. But there's not a lot of strength in the selling. Look at how strong the buyers were. And then as we pull back, we got a little bit of strength in the selling, but then it died off pretty quickly. But we're still, because of this, because we broke the zero line, we're waiting for confirmation, right? So we let this come up and then we buy this first pullback to the 18. That happens to be a pinch play right at the zero line. So this is a very good signal. Now, it doesn't turn into a monster winner or anything. Okay. I mean, it's not like you get rich, because you're going to be out of this by the end of the day. But it gives us a really good idea. And I purposely was finding an example of one that didn't make a huge amount of money. I mean, I can go and find you an example that showed huge winner, but I want you to understand that this is a game. It's a numbers game. You don't know what you're going to get. Sometimes you get paid quickly and handsomely, and other times you just make a little bit of money, okay? And you have to accept that. Other times you might get in and you might take a small loss, okay? So you have to be willing to do small win, small loss, small win, small loss, and then big win just happens to take place. Right? You're doing your job, and every now and again this will show up in your log sheet, right? And then you have another set of these, and then maybe another one of these shows up. So every 5 to 10 trades, you get a couple of really nice wins, right? But mixed in there is discipline. And if you don't have the discipline and the psychology to understand that, you're going to really struggle, because, I know you'd be looking at this saying, oh, I want to hold this overnight because it's looking good and all the bigger picture stuff. And yeah, in this time it would have worked, but there have been other times where it might gap down here, and that's all market dependent. And with all the volatility that we've got right now, I think you have to be very careful if you're going to trade intraday. So I wanted to make sure I gave this as an example, but I also wanted to understand the psychology of trading and the fact that it's a numbers game. So just learn we've got small wins and small losses, and we have to control those with discipline. And then you're going to have your occasional big win mixed in, and that is really where you're going to make your serious money. But you won't catch those if you're not disciplined, and your spreadsheet, your log sheet is not going to look good if you're not disciplined with all those other trades. All right. Let me know if you have any questions. See you next time.